All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely check out the website at cubicleinvesting.com. All right, guys. So I don't know if you guys have noticed this, but the RUT, the Russell 2000, which I just actually realized a week or so ago, the Russell 2000 now has daily expiration dates. I was rather surprised because I was somewhat regularly trading the Russell 2000 along with the SPX, particularly at the end of last year, 2023. And at that time, the Russell 2000 only had every other day expiration date. So in other words, the Russell 2000 option contracts expired Mondays, Wednesdays, and Fridays, whereas the SPX, had and also has daily expiration dates, so they expire every day. But I just realized, like I said last week, that the Russell 2000 now has daily expiration dates, and so if we go to the platform, so here is the symbol RUT for the Russell 2000, and if we look at the options chain, you can see here that there are daily expirations for the Russell 2000. Now again, this, I don't know how long this has been the case, but I just realized this last week, and I actually like the Russell 2000 because it kind of moves similarly to the SPX, which is the index for the S&P 500. So just like I did for the SPX, I also did some research on the Russell 2000 because again, when I'm trading these indices or indexes, right? Tomato. I like to be intentional on placing where I place my credit spreads, right? And so my credit spreads have to be implemented based upon some logic, some research, as opposed to just looking at the delta. I don't like to look at just the delta, which a lot of people do, but I like to do my own research and use my research excluding the delta to determine where I place my credit spreads, whether it be on the put side or on the call side when I'm trading these indices. And so any website that keeps track of market data, they keep track of the opening price, they keep track of the high. Let me pull up my pointer here. So they keep track of the opening price, the high of the trading session, the low value of the trading session, and then where the index actually closes, right? So you got the opening price, you got the highest price, the lowest price, and then where the index actually finishes the trading session. And so what I did was, just like I did for the SPX, let me just expand the spreadsheet here. And again, this is looking at 23 years worth of historical data. So from January 2000 to December 2023, I created these various buckets, right? So it's based upon the opening price and then the highest point of the day, right? So the opening price in relationship to the high, and then the opening price in relationship to the low. And so I said I wanted to see the number of occurrences that fell into these various buckets. And so as you can see here, the majority of the time, and to be exact, if I look at the two percentages, so 91% of the time, as you can see down here, 91% of the time, the RUT will be between 0 or greater than 0 and less than or equal to 20 with respect to the opening price. So the highest point that the RUT will reach on during any given trading session is roughly 20 when you compare it to the opening price. So 91% of the time to the upside, and then to the downside, we can look at the two percentages where the most occurrences took place. 89% of the time, the RUT is going to drop no more than 20 points below the opening price. Now, when you combine this gray section here, you're talking about essentially 99% of the time where when you look at the opening price, the highest point that the RUT will get 99% of the time is 50 or less. And the lowest point it will hit with respect to the opening price, 98% of the time, again, it's less than or equal to 50 points below the opening price. And then I also looked at the range of the high and low point for this time period, January 2000 to December 2023, just looking at what's the differential between the high and low point. And so as you can see here, the majority of the time, 75% of the time, that high and low point range is 20, right? But then if you expand it out and look at, so looking at the range of less than or equal to 50, we're talking about 96% of the time, the high and low point range is going to be less than or equal to 50. But we can see that the majority of the occurrences will fall in between the range of greater than 0 and less than or equal to 20. So that information gives me so that research, that information allows me to be intentional on where I want to place my credit spreads, right? And so I have a credit spread on the call side that expires on April the 4th. So today is May the 29th, right? So 6 days from today. And thus far on that trade, so the credit is $3,020. And of that $3,020, so far I have made 33.8%, or essentially $1,020 on that Russell 2000 trade. Now I could have taken this off on Friday, but I like this position here because I suspect, I have a high degree of confidence that the Russell 2000 is actually going to pull back on next week, just based upon some other research that I've done. So, but again, it's just, it's a probability. It's not a certainty, right? Because there's no certainty in trading. There's only probabilities and using information and indicators to put the odds in your favor, right? So I'm going to be trading, and so also what I look at too. So I always keep track of the previous closing price for any index that I'm trading. And of course, I primarily trade the SPX. I do trade the NDX from time to time, and I'll do a video on that as well. But I'm going to start trading the RUT much more. And so we can see here that on Thursday, March the 28th, the closing price was $21.24. The expected move right before the market closed was 18. And so I always look at the expected move for the next trading session, right? And so the next trading session is April the 1st. Today is Friday, so it's Good Friday, so the market is closed. So the expected move for Monday is 18, up or down. And so I already have an idea if I wanted to put on a new trade on the RUT, right? If I wanted to put on a new trade, I have an idea based upon the research that I've done, and also the fact that the RUT does not move. It rarely moves beyond 1.5% up or down with respect to the previous closing price, right? And so I already know that if I get to, or if on Monday I go on the call side and I'm at 2156, you know, then I'm in a good place. And also, if I'm on the put side, because on the call side, I'm looking for the price of RUT to actually decrease in value, right? My credit spread. And then if I go on the put side, I'm looking for the price of RUT to actually increase in value. And so I know that if I'm on, if I go on the put side and place a put credit spread, then 1.5% down from the previous day's closing price is 2092. So if I go there, or if I'm around that area, because there's no 2092 for the SPX, I mean for the RUT, and so, you know, it would be essentially 2090, 2085. If I can get there on Monday, for example, so Monday would be April the 1st. So 20, but of course the market is closed, so these credits aren't going to be right and exact. And also the great thing about the RUT as well is that you can get a credit that's in between the $5 increments, unlike the SPX, right? The SPX, you can either get a $20 credit, a $25 credit, 30, 35, etc. Whereas with the RUT, you can get a $20 credit, 21, 22, 23. So I like that, you know, and so I like that. So yeah, so I just wanted to bring that to you guys' attention, you know, assuming that you were not aware that the Russell 2000 now has daily expirations, but also keep in mind too that the options activity is not as robust for the Russell 2000 like it is for the SPX. So just keep that in mind as well. So you may not get filled as quickly, and you know, because the liquidity is just not robust, so it's not the same for the Russell 2000, so as it is for the SPX. So keep that in mind. But yeah, and if you're not aware of, you know, what I've done for the SPX with regard to the research, you can check out this video here and watch that video.